Hello traders, Gary Wagner here, just before 11:30 in Honolulu, 4:30 in New York. It is Friday. Happy Aloha Friday, as we say on the islands. Inauguration Day, January 20th, 2017, and this is the Daily Report for Gold and Silver, our weekend review, and what a week we have seen in the market, which culminated with today's presidential inauguration, in which we witnessed the peaceful transfer of power of one administration to the next, and we also witnessed the first words in Donald Trump as president in his inaugural address. Those words did little to calm the nation in terms of the divide, the chasm that currently exists, and the net result of that was a continuation of uncertainty rather than clarity, as far as I am concerned. The markets reacted accordingly. Gold, which had been trading quietly throughout the session, the evening session, I should say, ended up closing higher on the day and really spiked to higher ground following the inaugural address by Donald Trump. As we look at settlement prices today, gold is at $1207.70. This, of course, is most active futures, putting it up about $6.20 on the day, a net gain of about 0.5%. As you can see, the low 1198.20. That, of course, is important because we have our stops on our positions below 1195 and the high 1214.80. We will absolutely want to discuss our current trades in detail. We'll do that when we pull up our first chart. As far as silver goes, silver also showed a respectable gain, almost 0.6% to close back above $17 at $17.09, and that 9 cents increase was really the difference between trading at 17 and 17.09, the low 16.84, and the high on the day was 17.19. So traders, first thing that I do want to do on today's show is to kind of take a look at how gold performed this week, and most importantly, take a look at our current trade in gold, in which we initiated a position. I believe this was a couple of weeks ago, and we initiated the position at 1180. So you can see the price point that we took our first position on. We were absolutely a little bit late for the party, but we did receive an invitation and we did decide to attend. Now, since that point, we had the market move up. It hit these highs at around 12.12 the other day and then backed off. As it backed off the other day, we added to those positions at roughly 12.03. And this week, we also trailed our stops up, and our stops are sitting currently below 1195. We're definitely below the lows of this weekly candle and into the body of this candle, because my recommendation is to keep that stop rather loose with about a $3 or $4 swing. So when I say below 1195, if it's at 89, 90, 91, that's okay. I don't want this to be a tight stop because I expected some real volatility. So we're long two contracts, as I said, one from 1203, one from 1180. And in terms of the areas that we're looking at, we still have a clear area of resistance that we have to overcome, and it's a 50% retracement at roughly 12.12. And the best way to look at that is to convert from this weekly to a daily chart. But the main reason for pulling up the daily is so that you can certainly see that we got a moderate gain on the week. And we are now looking at 1, 2, 3, the fourth consecutive week in which gold prices have closed higher on the week. So traders, as you can see, I've done just that, and I have gone ahead and converted our weekly to a daily chart so we can look at the data points that it hit throughout the week. You can see that it actually traded under pressure. These are the lows that were achieved. These came in roughly at 1195. Our stop was already in play as we put our additional trade on, as I said, after the market hit roughly 12.12. And that is right here and right here, and then began to track lower. This is the point that we actually put on the second leg of the trade at about 12.03. All stops at this point need to be below 11.95, and as I said, I would have that be a loose stop. We can also see that today's activity, although we closed up higher on the day, about $6, it did come well off of the highs, which took us to about 12.14. So what we want to see next week is if in fact the market begins begins to pick up steam and we see it start to break through this particular price point, I would look for a couple of daily consistent closes above this price point, and at that point we should see this level, this price level, become support rather than resistance, which is what it is currently. And I still believe that our upside target on this trade falls roughly at about $12.50 per ounce. Obviously, maintain your current long positions in gold as well as your stops. So traders, when we went long initially on our gold position, we also initiated a long position in silver. Traders who took the call in silver got in roughly at 1665. The market is now at 1701. We have stops that are just sitting under about 15. I've got them very, very loose in silver because of the extreme volatility. We will look to move those stops up. We do have some profits on this particular trade, and I want to, starting next week, begin to at least lock them in by the use of trailing stops. Market sitting roughly at 1710, and in terms of different levels of resistance, there are a couple that we want to look at. The first real level comes in at around 1738, and that of course is based upon that recent high that we got about 2 days ago. Now, in terms of my upside targets on our current silver trade, what I'm looking at is as follows. As I said, we have this one top here that I believe is our current level of resistance, and that comes in roughly at about 1238. But you can also see our 50% retracement, and this, of course, is analogous to the gold retracement that we have. You can see the top that was here, so we see technical evidence of this price point being a pretty strong indicator of resistance here, a pretty strong indicator of support right here. So we have some good technical data that says this is a key number we need to break through, and if and when, I should say, we break through this particular price point, I believe we are destined for about 18 to 1831. The 38% retracement, which is our gold target, the corresponding number in silver is 1831. However, if you look at this top that comes in right here, which is precisely at 18, that is my exit strategy or target. If in fact that's how it unfolds, we got in at roughly 1665. We're looking to get out roughly at $18 per ounce. Therefore, maintain your current position as well as your stop. And as I said, we will look to raise that silver stop first part of next week. In other markets that we follow, and most importantly is the dollar, what we did see is the dollar begin to fall again. The dollar itself closing off about 1/3%, a 28-point loss in terms of the dollar index, which closed at 100.87. The low, 100.70, and the high, 101.50. So as you can see, in overseas trading, gold and silver were actually trading under nominal pressure, trading slightly lower, and the dollar was trading slightly higher on the day. In terms of the equities markets, they ran solidly throughout the beginning of the trading session into the inauguration. They were trading up about 50, 60 points vis-a-vis the Dow Jones Industrial Average, held on to those gains, and actually closed up 94 points at 19,827.25. Standard & Poor's and NASDAQ also showing very, very nice gains on the day, 1/3% in the Standard & Poor's 500. Still well off a new record high, but closing at 2271. And then lastly, I do want to look at the NASDAQ because the NASDAQ closed fractionally higher on the day vis-a-vis the NASDAQ 100 E-mini, closed at 50.59. We pointed out the fact that we identified a pattern simply called a three-river evening star. And of course, this occurred really at the beginning to the middle of December, beginning of this year. And it occurred at the same time when we identified a three-river morning star in gold and a bullish harami in silver, all on the weekly charts. I'm still looking at support right at around 100.77. That's our 23% retracement. We can also see these tops that come in, which is where I believe we would have any kind of significant support, and that would be at around 100 on the dollar index. Therefore, as I said last week, I believe that next week we should see the dollar drift to lower pricing. Now, although we had a fairly strong finish on the day today with the Dow Jones Industrial Average closing up almost 100 points at 19,827, when we look at the marketplace itself in terms of the weekly activity, we can see that the market absolutely closed a little bit lower on the week. And what I can identify more than anything else is the fact that when we look at this weekly action, we definitely see this rounded top developing. Now, we've seen this rounded top on many occasions. It typically occurs as the market trades, moves to a new high, or moves to a real area of resistance, and you get this sideways trading or consolidation, and that's typically before moving lower in the marketplace itself, the rounded top. When we get almost a sideways action without that roundness, we typically see the market consolidating before moving to yet a new record high. We even got that here, and you can see it's more of a sideways than a rounded top. But this is certainly a rounded top in which you get these series of highs here. The center happens to be capped by typically a new record high. We get that right here, and then you get a series of lower highs. And that kind of a rounded top on a technical basis absolutely indicates a potential for lower pricing next week. So traders, there's absolutely no doubt. Today's inauguration of our 45th president has certainly raised questions as to the future of our country and how our country will be governed. Rather than gaining real clarity, and I believe it's a little bit too early to tell, but based upon words that we heard from his inaugural speech, we can expect possibly more of the same that we saw during his campaign. He did little to address the chasm, the huge divide between polarized factions right now that exist in the United States, and his populist message really painted a much bleaker picture of America than most Americans see, including myself. Therefore, we really need to see how Trump acts and leads this country over the next 30 to 60 days to get any real sense of where we're going to go from here. So what I can address is our current positions and my recommendation of what we should do. Of course, we initiated longs in gold at 1180. We then added to that position at 1203. All stops are below 1195. Obviously, my recommendation is to maintain our current long positions in gold as well as our stops. We are also long silver. We're long silver below $17. We have some profits in there. We did not add to the position, as I think that gold will outperform silver if, in fact, we get a heated kind of a scenario developing with our new president. Maintain your current silver position as well as your current stop. This has been Gary Wagner wishing you, as always, good trading. We will talk to you next week for another daily update and review.